Good morning. Welcome to IG's Early Morning Call. It's the midweek trading session, Wednesday, 29th of March. Let's take a look at the headlines as we begin our look at what's going on in the markets today with what's been happening overnight in the Asia-Pacific region in Hong Kong. Alibaba in amongst the biggest gainers on restructuring plans and China's appetite once again for capitalism. Last night on the IG platform, big losses, all sessions for Micron technology. Then came a rebound, all about AI. And the oil price rally continues. As we go into today's sessions, we're holding on to the gains plus more as we've got reports suggesting that there's going to be some restriction on Iraqi exports of oil. Also, big moves yesterday on the way down in terms of inventories. American Petroleum Institute. Take a look at volatility. Fourth day in a row of losses, indicating that the risk appetite is rising, indicating that we are now going to be seeing some gains on the London markets and across Europe. In fact, the same sort of story yesterday at this time yesterday morning, where I was looking for some gains at the beginning of yesterday's session. Then came a drop back. But you can see in terms of the overall price action that we are basically sidelining since, what was that, sort of 6-7 days ago. 7,500 is absolutely where we are on the London markets. In Germany, France, same sort of price action you can see today. Got appreciable gains actually now beginning to develop on the German markets. I don't shade the Swiss markets, but I think one of the stocks worth watching this morning is going to be UBS. And banking stocks generally actually could well be in amongst the mix with some more positive moves around the sector. Sergio Motto has been reported as being the new chief executive of UBS. And he was the UBS CEO from the great financial crisis right the way through to 2020. And he left for a brief period to go to Swiss Re, and he's back again this morning. Certainly a stock worth watching. This is the French CAC 40, 71.29. Like the other markets, we've got gains at the moment. In fact, we're now at the top of the candle. I can't see many sellers in this market at 71.29. Overnight in Asia, in Hong Kong particularly, Alibaba shares soaring as much as 16% at one point after the company announced a major restructuring plan. You can see the Hang Seng stock index there up 2.17%. This is an interesting story for Alibaba. I want to show you what's going on with the shares of Alibaba in Hong Kong. If you look at the share price chart, you can see quite clearly on the right-hand side here, far right-hand side, this big gap that's opened up here. It's a red candle because the gap has resulted in a little bit of money now being removed from those earlier gains. We're now at 12.9%. Alibaba will reorganize into a holding company structure and 6 subdivisions, each within their own CEOs and boards. Interesting enough, you remember Jack Ma, the man that started Alibaba and the group, the banking payments group, and he's come back into public life as China yesterday begins to indicate that it wants to re-engage with a more capitalistic tilt to some of these stocks. Alibaba is benefiting from all this. The fact that it could well be broken up, I think, is one of the things we're seeing some big gains here. This is the Hong Kong stock for Alibaba, but don't forget it trades all sessions on the IG platform. So I think that could well be an interesting stock worth watching at 9 o'clock this morning. Let me just quickly take a look at what is happening on the Hong Kong markets. If you look at the Hong Kong Hang Seng 50, you can see the gains that we've seen today. We're well off the highs, but nonetheless holding on pretty much to all that we saw yesterday on the session. So Hang Seng stock index, one of the better performers overall overnight in the Asia-Pacific markets. Wall Street closed last night. US stocks are lower on Tuesday, led by a nearly 1% drop on the Nasdaq at one point yesterday. Then came a little bit of a rebound. You can see the Nasdaq was the poorest performing stock market there. Shares of Apple, Microsoft, along with other tech-related shares, which tend to be the most negatively affected by rising yields, weighed most on the S&P 500. Nasdaq Composite, you can see they're down almost 0.5%. Let me show you the Nasdaq chart so you can get a better idea as to what the price action has been doing. A big lower wick yesterday indicating that the markets rebounded towards the end of yesterday's session, and we're building on that today with a little bit of a springboard up. Yields yesterday climbing from 6-month lows as investors have been cautiously optimistic that stress in the banking sector following some recent regional bank failures may now be subsiding. And I think if you look at the longer term picture, you can see here that this, as I was talking about yesterday, was just a small retracement on the move. So we've got money going back into this market. Just want to show you what's happening with the S&P 500 as well. Nice little bit of a rally underway there. I think if we go back up over the 4,000 level, a little bit more positivity, I guess. We're just a short trip away from that at the moment at 39.97. Now, in Germany, meanwhile, we've just seen some consumer confidence data break across the terminals. GfK consumer confidence rising to a negative 29.5 in April after 30.6 in March. This is the sixth straight month of improvement, despite the fact it's still negative, for an indicator that fell to an all-time low back in October last year. Watch out in a few moments' time for the French consumer confidence number. In today's session, the euro is down just by a small touch at 108.27 on the trading day today after 2 days of gains. So not much move there for us traders in terms of the direction of travel. And I can't honestly say that there's going to be much today to stir much that goes on. Let me just, before I take a look at the data out today in the States, I'll show you the dollar basket bubbling along at the recent lows at 102.29. At 3 o'clock this afternoon, we get US pending home sales expected to drop by 2.3% in February compared to January. This would follow an unexpected 8.1% rise we saw in January month on month, the biggest rise since 2.5 years, and in 2.5 years, which was an interesting move. Now, I want to talk about one of the stocks I think certainly worth watching at the start of today's trade across the European markets today. It's going to be Next, reporting better than expected earnings out this morning for the full year. A 5.7% rise in annual profit, pre-tax profit rising to £870.4 million, higher than the 860 million that we've been looking for. So I think this all adds up potentially to a positive start for Next this morning. For 2023, it's kept its guidance for a 1.5% drop in full year price sales and profit of 795 million. I want to show you the share price chart. Recently, from the lows that we had back in October last year to the recent highs on the 6th of March, this stock is up 64.4%. Since then, we've seen a little bit of a downside move. But I like the look of this story this morning. Your stock would go below the 6,600 level. Opening at 67.35, your view would be presumably to eat into some of the recent losses that we've seen in this stock. That high that we saw there back on the 7th of March? Yeah, 7th of March. High was at 70.82. 67.35 is where we opened this morning. It's possibly unlikely to get as far up as that, but I'm assuming that we're going to get a gain at the start of today's session for Next. Micron technology shares very volatile on the IG platform late last night, all sessions. The stock was down heavily at one point, and all of a sudden came a rebound, but it ended down 1/3 after publishing second quarter earnings, and also what appeared to be a slightly better outlook for the third quarter. Let's take a look at the numbers, as the chipmaker posted a loss of $1.91 per share, much wider than the 66-cent loss anticipated by the market. Revenue also down short of expectations at 3.69 billion, down around about 53% on the same quarter this time last year. Now, Micron expects a loss of $1.58 per share, excluding items, which plus or minus 7 cents in the current quarter, compared with Wall Street expectations of 90 cents per share. And revenues are 3.7 billion, plus or minus 200 million, a drop of around about 60%, which would be the deepest revenue drop in more than 2 decades. Still, this forecast matches Wall Street expectations. I want to show you the all sessions share price last night. This is a little bodied candle with very, very wide, long-legged wicks, indicating that volatility that we've seen. The company executives yesterday making their best efforts to paint a rosy outlook. Micron's president and chief executive told analysts that he was confident about the long term. He expects memory chip industry prices to hit records in terms of market size in 2025. Why? One word you might have heard quite a lot recently: ChatGPT. The rapid expansion of AI, or artificial intelligence, is boosting demand for data centers. Let's take a look at what happened on the 30-minute chart last night. And you can see clearly where we saw the earnings released in this wide trade that we've got. And in fact, we ended at 59.85. This rapid expansion of artificial intelligence is boosting demand for data centers. A typical AI server has up to 8 times the amount of DRAM a normal server has, and 3 times the amount of NAND chips, both of which are produced by Micron. So Micron looking positively about the outlook. DRAM is a memory that raises when the device is turned off. NAND stores memory even when the device is off. So Micron very much in the center of all that. Oil prices continuing to climb in today's session, rising for a third straight trading day after the latest API data showed big declines in stocks yesterday, driving prices of oil up. I want to show you US crude prices. You can see after the recent gains that we've seen at the moment, we are building on that with the chart showing us at 73.82 on US crude. This data adds to the recent news that lifted the prices by nearly $5 since the start of this week. First, there was the acquisition of most of Silicon Valley Bank by First Citizens that triggered a wave of optimism across the asset classes, including oil prices. Then there was a survey saying China's crude oil imports are also expected to rise 6.2% in 2023. That's US crude. This is what's happening with Brent. Let me just tell you, up in today's session by a margin of 0.1%, building on the recent gains. And despite a dispute involving Kurdish authorities, halted around 400,000 barrels a day of exports from a port in Turkey. Concerns are growing amongst analysts that some are considering the loss of northern Iraqi oil as underestimated. And this as well, I think, has been pushing the prices up. Barclays told Reuters that any protracted outage of Kurdish exports until the end of the year would imply a $3 a barrel upside to the bank's 92-barrel Brent price forecast for 2023. Let's take a look at the API numbers that we saw yesterday. Back to those inventories. According to the API, US crude inventories unexpectedly fell 6.1 million barrels last week, while analysts anticipated a 180,000 barrel rise. Gasoline stocks up, distillates on the way down. Take a look at what else is happening in these markets. I want to show you briefly what's going on with gold before I get on to the other areas of interest in the markets, including sugar and the other movers at the moment. Gold on the way down today at 1961. Now, did you know that India is the world's largest producer of sugar? It's followed by Brazil, Thailand, and China holds the fourth spot. On Monday, a senior state government official in India told Reuters that Maharashtra, the top sugar producing state in India, could produce nearly 16% less sugar than previously estimated. There's a limited availability of sugar cane in the region due to unfavorable weather conditions forcing mills to close. I want to show you what's going on with New York sugar. This is number 11. We're currently trading at 21.11, and you can see here that this is highs that we've never seen before. So sugar on the way up. Now, South China experienced similar weather conditions over the past 2 weeks. Extreme rainfall and temperatures 1 to 5 degrees centigrade above normal prompted a decline in sugar yield in the region. And this is not just producing gains for New York sugar. If you look at other sugars as well, this is London sugar number 5, also to recent record highs at 616.1. These are markets that closed out yesterday. We haven't yet seen the move up today, but nonetheless, we see a continuation of this reported failure of harvests. I think we could well see some further gains on the sugar price. And then just want to leave you with one other area of the market, which we've not spoken about for a while, but bubbling across in the background is what's going on with lumber. It's been an interesting 3 or 4 days. We've seen 3 or 4 days of gains at the moment. And this is, again, yesterday's session. But the fact we didn't get quite as low as we were at that low point back on the 6th of January gives me some sort of a positive feeling about the things as to what's happening there. You can see that the market's here on the way up, but nothing like the sort of gains we're seeing at the moment for what's going on in the sugar market. But I think it's worth a quick look at what's going on with lumber, see whether or not we're going to get any further gains in the next few days. Just wanted to highlight that as something else worth watching. That's it. We're back at 10:30 with Charting the Markets. Do watch out for a potential rise in next stock at the start of the day trade after better than expected profit for the full year.